If you don't understand something, if you don't develop conviction around something, then don't invest in it because you'll be a weak holder. All we do is technologically enabled innovation. So we're a great complement to a Warren Buffett strategy because we know what these technologies are going to do. And so I would say diversification is a very good thing. Sure, value, growth, we'd be on the growth. We'd be a great complement to those sorts of strategies.
Hey guys, welcome to Everyday Finance. Among prominent financial pundits, the argument over whether Bitcoin or Ethereum will define the next 10 years has heated up. According to Tom Lee, Ethereum will eventually outperform Bitcoin in terms of value because of its growing ecosystem, smart contract capabilities, and use in decentralized apps, which position it as the cornerstone of the upcoming digital revolution. He thinks Ethereum is the trade of a generation, the potential to transform sectors outside of finance because to its versatility and expanding application cases. On the other hand, Cathie Wood is adamant that Bitcoin will always be the best digital currency available, as a scarce, safe, and deflationary asset designed to endure economic volatility. She sees it as the epitome of decentralized value. According to Wood, Bitcoin is more than just a cryptocurrency. It's a potential global reserve asset due to its fixed supply and institutional legitimacy. This disagreement highlights a larger split in the cryptocurrency space between Ethereum's potential as an innovation platform and Bitcoin's function as digital gold. As both networks develop, their rivalry is propelling the digital asset market to previously unheard of heights, laying the groundwork for what may turn out to be one of the most significant financial contests of the ensuing 10 years. Let's now examine Cathie Wood's viewpoint and see why she is so certain that Bitcoin's hegemony will continue for some time to come.
We do. 2 years ago, almost exactly, we bought a company called Rise, R-I-Z-E, and they have just done an amazing job throughout the UK and Europe. And in fact, I think we just hit $1 billion today.
Of your ETFs in London?
Yes, the listed ones in London. So ARKK, ARKI, and ARKG. So flagship Artificial Intelligence and Robotics, which is a new fund. We don't have this one in the U.S. And I think genomics is what they call it. We call it multiomics in the U.S. Of course. It depends if people had, investors had rebalanced during the boom, the 150% increase the year before, if every time we had reached, let's say, 5% of their portfolio or 7% of their portfolio, they had rebalanced to that original 5%, then they would have done really well, even with that drawdown. And we are certainly going to be out there educating a little more aggressively this time than we were the last time, if that happens to us again. The way I like to characterize what did happen, boom, bust. The bust was worse than the NASDAQ sell-off after the tech and telecom bubble. That should not have been because the technologies are ready and the costs are low enough. DNA sequencing costs in early 2000s, $2.7 billion to sequence one person's genome. Today, $200. We're going to get a lot more of it. So it makes no sense that that happened, but that just increased our conviction that we had become a deep value portfolio. And so the way I like to characterize, boom, bust, if you look at from inception, this is U.S. portfolio now, U.S., because that's the only one that's been in place for that long. From our inception to today, our compound annual rate of return has been 15%, even with that bust in the middle of it. So that gives you a sense. And I think that we have just begun because, as I mentioned before, we're hitting prime time in so many of these technologies that I think the world is our oyster. I don't want to be too comfortable in saying that. And we do, as I said, the valuation is back at a premium. we assume compression. We assume it in our assumptions. And our rate of return expectations are, well north of 15%. Typically they do. Now we have in 2018, when interest rates were going up the last time, we outperformed the market significantly. In fact, we were up when the market was down. I like to think that COVID was an anomaly. Governments will never respond to a pandemic the way they did that time, because we're going to be paying for that for years, and everyone knows it, and we've reached the limit. I don't think that's going to happen again. So the boom was a function of excessive monetary and fiscal stimulus. The bust was pulling the rug out from under it. I don't think we're going there again. I think Warren Buffett, and many people probably think I have nothing to do with the way Warren Buffett thinks. That is not true. Warren Buffett was very upfront. He said he did not understand technology and therefore did not invest in it. If you don't understand something, if you don't develop conviction around something, then don't invest in it, because you'll be a weak holder. All we do is technologically enabled innovation. So we're a great complement to a Warren Buffett strategy, because we know what these technologies are going to do. And so I would say diversification is a very good thing. Sure. Value, growth, we'd be on the growth. We'd be a great complement to those sorts of strategies.
Cathie Wood views Bitcoin as much more than just a digital asset and defines it by 3 fundamental characteristics: neutrality, security, and scarcity. She believes that Bitcoin is a revolutionary monetary network that is strong and independent enough to function as a worldwide financial standard, because it is based on unchangeable technology and a predictable supply. She characterizes it as a combination of technology, innovation, and economic principles that provide stability in a financial environment that is becoming more unpredictable. Although Wood recognizes Ethereum's critical role in advancing Web3 innovation and decentralized finance, she thinks the platform faces constant difficulties because of its open and competitive environment. She contends that Ethereum's hegemony is less guaranteed. Given the emergence of other Layer 2 solutions and alternative smart contract platforms, since innovation in that area can quickly divide or change user adoption, but Tom Lee sees the landscape in a defer where innovation, not scarcity, is what ultimately determines long-term value.
I love what China is doing in the space. They're distilling our models and going open source. And we in the United States actually forced that open source movement because our software companies stopped selling software because of IP theft. So now open source is the movement in China and is helping them move even faster than otherwise would have been the case. There's nothing like competition to get U.S. companies going. And so they looked at DeepSeek, open source. They said, hey, that was pretty clever. They have taken some of those ideas and applied them to their own algorithms. So this is a race. And, it's very interesting. I think even today, someone in China, it was one of the Chinese autonomous companies, they basically said, we move quickly, yes, but in this case, we needed full self-driving, Tesla's ideas, to reverse engineer that to get us going. So, and Tesla is well aware of that, and the U.S. is, but the U.S. is not preventing, unlike in the chip space, the U.S. is not preventing this software exchange. Mm-hmm. We've heard nothing about that. Yes, it's interesting. My background is economics. And so when I see capital flooding into a space, my first thought is, okay, there's going to be overbuilding and we're going to have inventory problems. And that was the story of the late 90s, right? Tech and telecom bubble, too much capital chasing too few opportunities too soon. The technology wasn't ready. The costs were way too high. That's what's changed here. The technologies are ready. We had deep learning in 2012, transformer architecture 2017. Costs have collapsed. AI training costs are dropping 75% per year. AI inference costs. So you put in a query to ChatGPT or any of the others, the costs of processing that are dropping 85 to 98% per year. And so the cost of innovation is collapsing. The cost of developing LLMs, as we just did, that's the one area that is getting more expensive, but it's a huge land grab. Who's going to win? And as I said, it may specialize in some way, shape, or form. Maybe one wins the generalized space.
We'll see.
We'll see. Yes, no doubt. It's interesting. I was on a show for the first time after the company started in 2015, and I made the comment back then that I thought he was the greatest inventor of our age. And of course, we had just started the company, and I walked out of that program thinking, oh no, I hope I'm right on this, because I just said that and that will be replayed. But it is true. It is true. He's proven it out. He's a genius. We said when the split happened, we didn't know if it was engineered partly and got out of hand, engineered partly because what does President Xi Jinping have to hold over President Trump's head? Tesla. A huge part of Tesla's production and consumption comes from China. So was that somewhat manufactured and then went way off the rails?
Have you asked Elon about that?
I have not. I stay away from politics. We just keep our focus on the technology. But my hypothesis was that might have been true. And even if that was true, and even if it was a bad breakup, which it seemed to be, but that President Trump needed Elon Musk's genius to be number one in space. And he's a realist, President Trump. Number one in space. I mean, Tesla has right now, I think 95% of all the satellites up in space. It's going to be very hard for anyone to break through that. Winner take most again. I think in the U.S., for example, which we think will be the largest market. We don't think China will be the largest market because the cost to ride in a taxi there is 35 cents per mile, right? And in the U.S., the cost per mile for an Uber, minimum $2, and at surge
City,
time,
it's like a joke.
$4 to $8. It's ridiculous. So it's going to be much more valuable in the United States. And in the United States, we have two players. Everyone else has failed. I know that Zoox with Amazon is trying to break in, but they've been working at it for a while. The two so far are Tesla and Waymo. Waymo commercialized way before Tesla in 2018 or 19. Tesla commercialized just this June in Austin, Texas. But now we're watching the race. And Tesla is moving very quickly. Waymo's trying to keep up. We think Tesla wins the race, mostly because it is vertically integrated from a manufacturing point of view, whereas Waymo is dependent on other auto manufacturers, and it's dependent on a hardware stack that is much more expensive. It has 23 sensors. So We've got LiDAR, radar, and then just plain computer vision. Tesla's relying only on 9 sensors, computer vision alone. And the philosophy there is, hey, how do we drive cars, human beings? With 2 sensors, our eyes, right? Okay, so Tesla has 9 and believes that a Tesla car will be 10 times safer. It's almost as safe as a human being right now, 10 times safer in the next few years.
One of the more ambitious predictions for Ethereum is made by Tom Lee, who sees it as the cornerstone of international finance within the next 10 years. He thinks Ethereum may become essential to institutional operations and digital infrastructure globally because to its role in tokenization, decentralized finance, and AI-driven financial systems. According to him, Ethereum serves as the digital oil that drives the upcoming wave of financial innovation and connectedness. According to Lee, its worth may reach $60,000 in 5 years. And in the long run, it might even eclipse Bitcoin's network value. However, despite his continued optimism about Ethereum's rise, he still predicts that Bitcoin will hit $1 million, establishing both assets as dominant but in distinct markets. In contrast, Cathie Wood argues that the purity of Bitcoin is its impartiality, security, and scarcity. What makes it so powerful? She views Bitcoin as the ultimate global monetary basis that transcends market cycles and technological advancements, rather than merely another asset. According to her, Bitcoin is the digital counterpart of physical currency, an uncorrelated and uncorruptible store of value in a world that is full of volatility. Investors are forced to choose between Cathie Wood's belief that Bitcoin will continue to be the unwavering cornerstone of the digital economy and Tom Lee's vision of Ethereum as a generational growth engine revolutionizing global finance. Which vision, innovation, or immutability will influence the direction of money in the future?